Morning traders. So in this video I'm going to talk about price action and also price action patterns. So price action, this is just the action of the price, or this is just what the price is doing. It is more of a structure or the overall movement of the market. So price action, in price action we normally look at the price action patterns. So price action patterns, these are patterns which show us when the market is about to change the direction. So there are many price action patterns out there, but just in this video, I'm just going to focus on three. Just going to focus on the double bottom, double top, the head and shoulders patterns, and also the 1, 2, 3 move. Just to keep it simple, don't need to complicate things, but just going to show you the simplest ones and the most common ones also. So let me start with the 1, 2, 3 move. 1, 2, 3 move. This is a very simple pattern. It just occurs when the market just makes a high, makes a high, makes a higher low, it makes a higher high, and then it retests back to this same point. So when the market retests here, you can anticipate the markets to go higher than this level, and you can place a buy just below those zones. So the way this works is when the market, to first of all, coming from down there, it must come into a level of resistance, reject from this level of resistance, and then it must break the level of resistance more than 50%. It must break it, must make a big break. Okay, it must not just break up to here or up to here. It must make a break which is this 50%, or it must break this break here. It must be this equal to this movement which was here. Okay, so the market comes here, retests, breaks this level, then wait for the market to retest to this level, to come back to this level, then you can predict that the market will go up from here. That's how a 1, 2, 3 move works. So this 1, 2, 3 move, it works for trending market only. This is just a trend continuation pattern, whereby when you want to enter with a trend, when you're trading, you can either be against the trend or you can trade with a trend. So when you're trading with a trend, which means you are, if the market is going up, you are buying or you are going long. If it is going down, then you are shorting the market or you are selling the market. Since we have trend following strategies, and we also have counter trend. Counter trend, this is when the market is going up or when the market is bullish, but instead of buying or going long, you are selling or you are simply going short on that certain pair or asset. So this is how 1, 2, 3 move works. Just when the market breaks, when the market comes to the level of resistance, rejects that level, and then breaks this level of resistance here. But the way it should break, it must break more than 50% of the level. It breaks and then it retests back, then you can enter. So if you remember in the previous video, I was talking more of I think I mentioned something about confirmations when I was talking about resistance and support, whereby when the market reaches the level of resistance and support, you must wait for a confirmation before you enter a trade on that certain pair. I think I said something about like that. So we mainly use price action patterns and candlestick patterns to confirm how strong these levels of resistance and support are. So if I see this level here, this is if you have noticed, this is what we call a resistance here turns into a support, where the market comes, rejects from here, comes back, it breaks this level, and then this same level which was used as resistance here is used as support. So here you can see that the level which was used as so you can see that this same level which was used as resistance here has now turned into a support. So just to convince you that the market won't break here, you can use the help of the 1, 2, 3 move, because the 1, 2, 3 move suggests that once the market reaches this level, bounces from it, breaks the level and retests, then the market may go up. So this example is for an uptrend. So if the market is in a downtrend, you may just look for the opposite to happen. So if this is a support level and you're seeing the market comes down to this level, hits this level, and then rejects this level, and then the market breaks this level, and then it retests, then you can enter a sell from here. You can anticipate that the market is going to go down from this level. So the market comes here, bounces from this level or rejects this level, and then it breaks this level, more than a 50% break, and then it comes back to this same level, then you can enter a trade there. So that's all about the 1, 2, 3 move. Next, I'm going to look at something known as double bottom or double top. So this is another very common price action pattern. Double bottom, double top is a very common price action pattern. So this just happens. Let me start with the double top. So this happens when the market is in an uptrend. So the market is coming an uptrend. It is coming. Maybe it is when the market is coming like that. Then it reaches the level of resistance there. Then the market fails to break this resistance level. The market comes back, makes a higher low there, and then it comes back to hit the same level, but again fails to break this level. Then from there the market changes direction and starts going a downtrend. So when the market reaches this level, then changes direction and goes in the opposite way. So basically, the market is coming, it makes a low, a high, a higher high, a higher low, a higher high, a higher low, a higher high, but reaches a level of resistance, a strong level of resistance there. The market comes from that level and then again retests this same level, and then the market now goes down from there. So once the market is coming and it fails to make a higher high, so in this example, a market fails to make a higher high, instead made equal highs. So these equal highs is what we are calling a double top. Since this first top is second top, so what you call a double top, meaning the uptrend is now no longer valid. So we can anticipate that the market will now go down from this level. So for the double bottom, just the opposite of a double top. So a double bottom, this occurs when the market is coming down. It makes a low, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and then the market here reaches this level of support there, and then fails to break this level. It goes up there. It makes another lower high, and then when the market comes back to this level, it fails to break this level and make a lower low. So the market from this level we make what is known as a double bottom or equal lows here. So when this low is equal to this low, what we call a double bottom. But we only regard the double bottom when it appears on a strong level of resistance and support. So you may regard this as double bottom when it appears on the right place. By the right place, I mean a strong level of resistance or support, same as a double bottom. Okay. So it just happens when the market is coming down, it makes equal highs or equal lows. So I think that's it for double bottoms. Now look at what is known as the head and shoulders. So this head and shoulders is a more complicated or a more advanced pattern. This happens. So this happens when the price is price hits a certain level, fails to break that level, but when the second attempt breaks the level, the market comes back again, breaks the level again, then the market comes back to the same level, and then from this point the market drops. So the market here, it made a high and bounced off a level of resistance, and then made a higher low. The market on the second attempt managed to break this level of resistance here. It broke this level of resistance and managed to make a higher high. But when it's way back, this level did not hold. This resistance didn't turn into the support. Instead, this level broke here, and the market came back and tried to make a higher low. But the market again retested in this same resistance level, and then from this level, you expect the market to now come down there. So that's how head and shoulders will look like. So this happens on an uptrend. For the example of a downtrend, it's just the opposite. So this will just happen when the market, market is coming down, reaches the level of support, fails to break the level of support, comes back up, breaks this level, again breaks the same level, and then it comes back to a level, and then it bounces from here. So this is what they call a head and shoulders pattern, because it will look like the head and shoulders here. This is the head and shoulders. So this pattern is valid when it is found on a strong level of support and resistance. So market just comes to this level, bounces off, comes down, makes a head, comes back, and then makes the other shoulder, then comes back down there. So just as simple as well. So just show you quickly how these patterns will now look like on a real chart. So this is what we call price action or reversal patterns. These are not the only patterns there, but there are a lot of other patterns, but these are just the most common, the most prominent. Every pattern is effective if used the correct way. So I can't say these are the best patterns because people have different tastes. For other people, they may be the best. For other people, they may be the worst. But just the important thing is that use them correctly. So I'm going to look for a 1, 2, 3 move here on the charts. So I'm going to look for a 1, 2, 3 move. Let's see how you can apply that 1, 2, 3 move on a real chart. If you want to enter a trade. So okay. Look for trending market. Okay. This is a 1, 2, 3 move. So this is a basic 1, 2, 3 move here. If you can see this, so the market goes up, comes back here, then the market breaks and then retests this level, and then the market goes up there, making a 1, 2, 3 move. But this is let me look for a more clear pattern. But that's a 1, 2, 3 move. Things on the chart won't look as perfectly as they look on drawings, but you just as time goes on, just need to learn to see the way the things, just tend to see, like when you are just use the charts, be able to see the patterns without troubles, but the drawings don't look exactly as the real price here. So again for a 1, 2, 3 move, 1, 2, 3 move. Okay, here's the more clear 1, 2, 3 move pattern there. So the market goes up, makes this 1. So we call this first move 1. Then the second part here, the second move. So this is 2. Then the market, oh sorry about that, there's that part there. Okay, sorry about that. So the market now goes up and makes the second, now makes 3. Now what you're looking for is the market to come back to this level here. You see, so the market comes back to this level. So the market comes back to this level for 3, and then you can enter a buy from here. For the markets go up, you can enter a long position from there. Okay, just as simple as all that. Okay, we will look for, you can look for another example. We have 1, 2, 3 move. This is another example on a downtrend, but it doesn't really look that much clear. So let's look that much clear. So look at this example here. 1, 2, 3 move. So this example here, sorry about that. So the market came down there. Market came from there, made the 1 there. Then the market came back, made the second move there. Showing as the second move there. The market came back. Then we want the market to come to retest this level here. The market retest this level, which the market did retest it to this level. So that zone, that's where the market retest to. So the market now retested to this zone, and then it bounced off this zone and came down. So that's about the 1, 2, 3 move. Now I'm going to look at the more reliable pattern, like the double top, a double bottom. So a double top or double bottom, just where the market just makes equal 2 highs or 2 lows which are equal. Like example of so this was a double bottom down there. So the market comes there, makes the first bottom, makes the first part, it's where it made here a lower low, it came back, then the market came back down, and then from here the market went up from there. So in just simple terms, a double bottom, this is just when the market makes a W, or you just see a W formation in the chart. It's a double bottom. When you see an M, that's a double top. That's the same place where you can put it. So just like you can see that this looks like a W. So the market came to this point, went up, came to this point again, and then went, which made so this was the zone. The market came to this zone, went up a bit, again came back, and then it's bounced from here, and then it went up. So you can enter a buy from there. So for the double top is just an M formation. Double top is just an M formation. So a double top going to look something like look for a good double top example. So that's a double top over there. So once you just see something which looks like an M on the market, don't hesitate, that's a double top. If you say W, that's a double bottom. Just as simple as all that. So a double top happens on an uptrend, double bottom happens on a downtrend. So this was the double top which occurred here, where the market came to this level, came down, retested, and then again came down. So when the market came here, we could have entered a sell. So when you just see a W, that's you can enter for a double bottom. When you see an M, that's a double top. So let me go. So I'm going to show you an example of a head and shoulders pattern. So head and shoulders pattern. Yeah, and by the way, these patterns, they happen on each and every time frame. Yeah, so that's one example of a over the shoulders pattern. So you can see, makes a shoulder. It goes back up again. Then the market here makes the head. The market makes the head. Market then breaks this breaks the neck level. It breaks that line of support which was made there. To test the same level, and you can now enter for a buy now. Okay. So the market came, made the shoulder, went back, broke this level, came back, and then retested to the same level, and then went up from that level. Okay, so this is an example of the shoulders pattern in a downtrend when you want to look for buying opportunities. So if it is in a uptrend, it will look something like this. So the other for an uptrend, it will look something like this. These patterns won't always look very perfect, but you must just know how to read them. So with practice and also with time, you're going to be able to recognize these patterns that are troubles. But this how the shoulders patterns are going to look like. Not others will look better than this, and others will look worse than this, but you just know the concept of how they are formed and how to identify them. So this is head and shoulders, where you see the market made the shoulder, the head, the shoulder. So the market came to this level, so it's made the where it hit first, retested from there, broke this, made the head, came back this level, then came back here. And if you're trading this, you can enter a sale from here. You'd have got this whole move. So that's it about this candlestick patterns. You can contact me for more questions if you have any questions. That's it for this video. So that's it for this video. I'm going to talk about candlesticks in the next video.